We learn how to handle and relate with money primarily from the homes we grew up in. What our parents teach us or don't teach us about savings and the power of buying end up being what we believe are the right and wrong ways to work with money. Some of you had great role models growing up. You learned how to handle money, spend wisely, and be smart with a budget. For example, Kate's parents believe in not accumulating debt. So they built their own house, started a business, and purchased all of their vehicles for cash. They were able to raise their kids debt-free because they never took out a loan. Money takes on a different meaning for each of us. For my Grandpa Wallace, my mom's dad, he grew up during the Great Depression, and his family lost everything during that time. I remember him telling me short little stories about how many times his family had nothing to eat because they didn't have the money to pay for it. This shaped my grandpa's emotional relationship with money, so strongly that he became a penny pincher. He never overspent, always did his research before he made a large purchase, and always paid cash. Not going into debt was a great rule for my grandpa. However, my mom would tell me later on in life that there were two sides to that coin. Although my grandpa was an excellent steward of his money, he was also extremely controlling in his marriage when it came to how money was spent. This caused a lot of tension and frustration for my grandma. So why am I telling you this? Because money really has two sides to how we relate with it. It has a logical side where we can think about what we're buying and why we need or want something, and there's an emotional side to it as well. And often the emotional side is the stronger of the two. This relationship, depending on our experiences with money, can take on different forms in our lives and in our marriage. So for my grandpa, his life experiences shaped both his logical and emotional relationship with buying and saving. Some of it was healthy and responsible, and some of it was unhealthy and unfair. They say that buying is 20% logic and 80% emotional. Would you agree or disagree with that? When you're buying something, is it usually a need or a want? How do you justify the right way to spend money or not spend it? Those rules you've created for yourself can have a huge impact on your relationship with your spouse and how they feel empowered and trusted or disempowered and taken for granted. So the way that you relate with money or handle it are big components to shaping not only your financial future together, but your connectedness as well. Are you a team that makes financial decisions together, or does the buck stop with you? Dave Ramsey says it best when he describes money as being amoral. That means that money in and of itself has no meaning. It doesn't have feelings, and it's not good nor bad. Dave uses the metaphor of a brick. A brick by itself has no meaning. It's what you do with that brick that shapes your relationship with it. You can take a brick and throw it through a window, or you can use it to build a hospital or a shelter for the homeless. You can use money to break up a marriage by not being accountable to your spouse, by making poor purchases, and by always spending more than you earn. Or you can use money to bring your marriage closer together by following a budget, making purchasing decisions together, and planning for the future. And that brings me to our first key point. Your worth is God-given. It's not related to how much money you earn. Your self-worth shouldn't be tied to your paycheck, and your paycheck shouldn't keep you from being the best husband, wife, or person that you can be. I believe when we follow our passion, we find our self-worth. What are you passionate about today? Is it sports, working with kids, teaching adults, or maybe working with numbers? Whatever it is, following that passion unlocks your self-worth and fulfillment in life. I had the sad experience early on in my life of following money just to make myself feel good and believe that I was important. And you know what? the more money that I made, the more miserable I was. The thing was that it had nothing to do about the money I was making. It had everything to do with not having a career in what I was passionate about. Although this was an extremely difficult lesson for me to learn, it was one of the best lessons of my life, because today I couldn't be happier. Working with individuals and couples with their relationships and teaching LifeWorks classes has opened my eyes to a better life and more opportunities that I couldn't have ever imagined. During this session, I want you to start thinking about what you're passionate about, what gets you excited and makes you want to get up early in the morning and stay up late at night. What is it in your life experiences that have made you feel the most fulfilled? My dad was a pastor, so he never made a lot of money, and my mom was a nurse, so basically she was kind of the breadwinner, so to speak. But it always seemed that my parents would get into a lot of disagreements and a lot of fights about money, especially when you have 3 little kids who are wanting to go on vacations and get the cool clothes that their friends are getting, and so it can create a lot of problems. Now, my parents had different philosophies about the way to spend money. My mom was kind of the penny pincher, and she was the one who really kept the budget, and my dad was the yes man. My parents would get into fights because we wouldn't go to my mom ever to ask for something. We'd always go to my dad, because I'd be like, Dad, I just need this new pair of shoes for basketball. They're so cool. They're the Air Jordans. They're 130 bucks. Can we get them? Yeah, sounds okay. Yeah, sure, no big deal. Okay, and I'm like in 7th grade. No kid needs that. My dad goes to talk to my mom, and he's like, oh, Zach needs a new pair of basketball shoes. Gordy, are you crazy? That's not in the budget. And they would get into a big fight. And then I would be like, I don't know. And my mom would take me to Target and get me Voits. Okay? So that's kind of the way that our household worked, okay? So a lot of disappointment on my end. So growing up, I always kind of had this feeling of kind of want, because I always felt like a lot of times I couldn't get the things that I wanted. So I thought, okay, I'm going to go in and I'm going to get a business degree, and I'm going to work for a corporation, and I'm going to try to climb the corporate ladder and make good money and live a rich lifestyle. And after grad school, I went and I did that. Kate and I got married. We moved down to the cities, and I got a job as a manager with a large corporation, and I made really, really good money. It was the first time that I had made really, really good money as far as a professional job. And that was awesome. But everything else absolutely sucked. I hated what I did. I worked extremely long hours, and I really didn't care about my job. If our sales went up, I didn't care. It didn't affect me at all. I didn't see anything as far as on the back end of that. And customer complaints and things like that, it just wasn't me. I didn't feel passionate about it. And my dad had been doing this business for about at that time about 6 years, and it was really kind of just more of a hobby than anything, not necessarily a business. And he said, "Would you quit your job and come do this full time with me, and we'll have a go at it?" And I've always been super passionate about meeting with couples and helping couples, and just kind of finding solutions and talking about what's going on in your relationship. And so I was like, we'll see if this works. So Kate and I discussed, and we went through our budget, and we found the number that we needed to make, and we've never looked back ever since. And so I guess the point of this is that some of you, whether you're in school right now, or you're in a job that you like or don't like, or you're maybe in a job where you make a ton of money but you hate it, the biggest thing that I've learned is that life is way too short to be doing something that you hate. There's no amount of money that you can ever earn to make up for all that lost time when you might be working long hours and you can't spend it with your family or your kids, or you miss out on time with your friends, and kind of so on. So if you're in one of those spots right now, really start to think about what you're passionate about. And if it ends up being that maybe you need to go back to school, or you need to do something like that to be able to fulfill that dream, talk about that in the money section. Because if you don't have the money, sometimes that can kind of restrict on what you want to do. So planning for the future is a really important part of thinking about this. Did you know that the leading factor for couples getting a divorce today is money fights and money problems? Financial management and the understanding that you have to work together in marriage as a team when it comes to handling your finances is critical to your success. We believe that when a couple's in a bad place with their finances and they're underwater, it's not always the stress of the problem itself, it's how they manage the stress. What we mean is that it's how couples talk about the money stress that makes the difference. When a couple begins to play the blame game and they start attacking each other instead of working together as a team to climb out of that hole that they're in, they're destined for more problems and for separation in their marriage. Always remember this, you're a team, you're in this together, and you both need to act like mature, responsible adults when creating a plan to climb out of debt and plan for your future.
You know, Zach talked about the changes that we had made, and there were times when we went through, you know, crunch time with budget and, okay, incomes are changing here, how are we going to make this work? And so one, it starts with what's your role, what's my role, what's our role together as we look at money. So before we were married, I was a single mom with a little kid. I had a very strict budget. I knew exactly where every single dollar went, every paycheck. I have this much for groceries, and you know, there's no way that I can make that be flexible with just my income. So I was very, very tight with my budget, and I had everything under control. Zach came into the picture. He had a little bit different mentality about how he spent his money. He was a single guy. He used credit cards. He, you know, was more free with,
I was stupid with money.
Let's just go out to eat. Let's just do this. And it was totally different for me. So,
for example, when we first started dating, I didn't really have any money. I was an admission counselor. That was my first professional job. And, you know, they don't get paid a lot, but it's a great job. And whenever I didn't have money, I was like, well, I got to take her out, you know, got to go do something, got to, you know, just go have fun. And I would just put everything on the credit card. And it was just really stupid. It's really bad.
So before we got married, and especially right after we got married, we had to decide, how is this going to look? Because your way is not going to work with my way, and my way was better, right?
It was.
So, and it's interesting how it's evolved since we've been married. So we started out, and I still maintained, you know, I watched our accounts, I paid the bills, I managed that side of things. And Zach was involved, but not a whole lot. Today, it's opposite. Zach pays the bills. Zach looks at our bank account 5 times a day. Zach, you know, he knows where the money's going, and when he says, oh, what should we go out to eat tonight? And I say, I don't know, can we afford it? Because I haven't paid attention, you know, as much as I did. So not that that's right, but that's how it can evolve. But the big thing is that we're both involved in making big decisions. We're both on the same page when it comes to, you know, we need a new fridge. How are we going to do this? Okay, let's figure this out. And we've set aside money and savings, so we can do that. So the bigger stuff, you got to be on the same page.
What changed for us was going through a program called Financial Peace University. Kate and I went through that program, and because I was quitting my job, starting to do this, and we needed to really kind of focus in on our budget. And after going through that program, it is by far the best thing that we have ever come across to help you really sit down and figure out how to handle your finances. Because again, you're both coming from 2 totally different families, environments, and communities, and ideas about how to spend money and what's important.
I think the biggest thing is that it really forces you to know where your money's going.
Yep.
So before we started, even though we paid attention, there was still so many things that we didn't recognize we were spending money on, or you know, that it's the stuff that adds up, the little stuff.
Yep. Rising costs of education have made student loan debt and credit card debt rise in extreme amounts over the past 10 years. We've worked with multiple couples going into their marriage that have over 6 figures in student loan debt. One couple shared with us that they had over $300,000. When you begin to look at student loans, credit card payments, car loans, etc., you can see how when combined, your debt can start to feel overwhelming when you put it together. And that brings me to key point number 5, and that's having a common pot. What a common pot means is really combining your finances when you guys get married. I've seen it done a lot of different ways where, I know of a couple who they both make significant amounts of money and they've always just paid their own bills kind of their own way, and so they keep stuff separate. But the thing that I like about having a common pot and a combined joint checking account is the fact that there's accountability. Because one of the biggest issues that this couple has that I know is that he is a spender. And she's always after him about not spending too much. But as much as he says he hears her, he doesn't hear her. Because he'll still go out and he'll buy that toy, or he'll buy that electronic, or he'll just go and he'll spend money on whatever he wants. And then they get into a fight, but really there's nothing that she can really do about it because there's no accountability because they haven't joint things together.
Because he can say, well, it's my money. It's my money.
But when you make it our money, it totally changes everything within your relationship. It changes the dynamics. So Kate and I have a joint checking account, and we have our stuff that is set for our bills, and everything is budgeted. So basically everything is spent before the month begins. Any of our extra money is kind of allocated between us where we both get an equal amount to spend as far as free money goes. But if one of us goes over, that's kind of a clear and easy way to be like, well, Kate, why did you go shopping when you knew that we didn't have the money? And she could say, well, Zach, why did you go out to eat when you knew that we didn't have the money? Do you kind of see the difference? Okay.
And the other piece to this is coming up with a dollar amount that you won't spend over that without talking about it. So whether that's $20 or $50 or $250, that you won't go over that amount without having that conversation.
Right. Sometimes we've had the experience where a couple will be talking about joining their incomes and one has no debt, and they've worked extremely hard at doing that. They work full-time throughout college and all those different types of things, and then the other person has accrued significant credit card and student loan debt. And they'll ask us to come in. They're like, I know that we're getting married and I love him or her, but what do we do with this? Because I've worked so hard to be debt free, and he or she has all this debt. And our recommendation is you guys are signing up to be one, and when that happens, you tackle that stuff together. Okay? And when you're tackling it as a team, it builds so much more unity and togetherness than if you were trying to do it alone. The whole point of getting married is you're doing it together, right? That's the whole reason why you guys are sitting here today. But if you take the mentality with your money that it's separate, it changes your focus. So combine things. Number 6, it's important to meet with a fee-for-service financial planner. I don't know if anybody in here is a financial planner or if you've ever met with one. We recommend meeting with a fee-for-service because they're typically not going to be selling you any types of products. They're basically going to look at all of your debt, all of your income, and when you would like to retire, and they'll kind of give you a nice spreadsheet for how much you need to invest and in what types of investments. And they also can be a really great accountability partner for you. So for example, if you meet with a fee-for-service financial planner once a year, and let's say 1 year you have a set amount that you're going to save, but then you go buy a Lund fishing boat, there might be some accountability questions about why you did that, okay, and how that's not following your plan. As soon as you get married, it's critical that you meet with an insurance agent as soon as you can so that you're being proactive in protecting yourself and your family in case of an emergency. The first type of insurance that we want to discuss is life insurance. There are 2 main types of life insurance: term life insurance and whole life or universal life insurance. So what's the difference between them? Term life offers a higher death benefit payout, and it's ideally suited to individuals or couples who require a temporary insurance policy. So for example, term life might be suitable in the scenario where you as a parent should pass away before your children are grown or before their education expenses are paid. Term life insurance is by far the cheapest and most affordable way to protect yourself and your family in the event of a tragedy. For example, a young, healthy couple can typically purchase up to a $500,000 policy for under $50 a month. That's a really, really good deal to be able to protect your family. The next two types of insurance policies that we want to cover are whole life and universal life. These are more permanent in nature. These policies also build up a cash reserve over time. The next type of insurance to talk about is disability insurance. This is a really important one not to overlook. In your lifetime, you have a much higher probability of getting hurt from an accident and not being able to return to work than you do of having an accident and dying. Today, just over 1 in 4 of today's 20-year-olds will become disabled before they retire. In the United States, that equates to about 12% of our total population. The thing to think about is that more than 50% of those people became disabled during their working years, which is between 18 to 64 years old. Both Kate's dad and my uncle have Parkinson's disease. For both of them, neither one of them had long-term disability insurance when they were diagnosed. A few years after dealing with the beginning effects of Parkinson's, they both had to quit their careers, losing their ability to earn. When talking with both of them, they both told me the same thing. Losing their ability to earn and to contribute to their family's financial well-beings was by far the hardest emotional and psychological pain that they dealt with. Dealing with Parkinson's is one thing. Losing your ability to take care of your family and losing a lot of your self-worth is another. So don't wait. If they were both here right now, they'd tell you the same thing. Prepare for the unexpected and take care of your family today by getting long-term disability insurance. Lastly, with insurance, we want to cover homeowners insurance and renters insurance. If you have a home already with a mortgage, you already have homeowners insurance because the bank requires you to get it. However, if you're still renting, renters insurance is a cheap and smart way to protect your assets in the event of a flood, a fire, or a break-in. If you don't have renters insurance, go out and get it this week. It's one of the cheapest ways to protect yourself and your family if a disaster strikes. Remember, insurance is there to insure. It's not an investment. We get insurance to provide coverage for ourselves and for our loved ones in the event of an unforeseen accident. Insurance also provides a peace of mind that your family can grieve during a tragedy because they know that they'll be taken care of if there's a loss of life or a loss of personal assets. The next important piece to talk about when you get married is a will. Estate planners say that nearly 70% of Americans die without a will. If you want to leave your family in the dark about your wishes, then don't leave one. Just know that by not leaving a will, you're going to create a huge headache for your family. Because instead of being able to simply read a document that states all of your wishes, you now have left everything up for interpretation. Sometimes this works out fine, but a lot of times this creates terrible stress, heartache, and greed between family members. Making a will is one of the best ways that you can leave instructions for your family to be able to follow in the event of your death. And since we're all going to die at some point in our lives, we all need to take the time to create a will. There are two main ways that you can acquire a will. And because we're Dave Ramsey fans, we're going to pass on the same advice that we learned from him. The first method and most cost-effective approach is to use an online legal service. We recommend uslegalforms.com. They have state-specific advice that will be tailored to your needs depending on where you live. The second way you can obtain a will is by hiring an estate attorney. Hiring an estate attorney is more expensive, but this will also allow you to be able to ask questions to a legal professional in person, which some people prefer. Either way, don't wait. When buying a home, there are 3 main rules of advice that we teach couples. And again, it's something that we learned from Dave Ramsey and Financial Peace University. The first thing that we recommend is not to purchase a home that's going to cost more than 25% of your combined take-home pay every month. As you'll hear Kate and I talk about in a minute, buying a home that you can't afford will only cause you more stress, more problems, and more tension in your marriage. The second piece of advice is to put down between 10 to 20% of the home value. A lot of banks won't even allow you to purchase a home anymore without putting down at least 10%. But if you can put down 20%, the more good faith you're showing the lender and the closer you're going to be to paying it off. Last but not least is getting a 15-year mortgage if you can. The difference in the amount of money you're going to save between a 30-year mortgage and a 15-year mortgage is typically in the hundreds of thousands of dollars. Now, when Kate and I first purchased our home, we couldn't afford a 15-year mortgage, so we got a standard 30-year. But as soon as we could, we refinanced our house and moved to a 15-year mortgage. By doing that, we'll end up paying our house off in half the time, and we'll end up saving close to about $150,000 in interest. Believe me when I tell you that it's in your best interest to get a 15-year mortgage. If you get really overextended, no matter how big and how nice that house is, if all your money is going towards the mortgage, it's going to create a huge headache for you because you're never going to get to enjoy it. Typically, if you haven't purchased a home already, we say start smaller, be able to really afford those mortgage payments, and you can always move up.
A big part of this process of talking about your finances and combining them and how does that look is dreaming about your future together and how are you going to afford that future and how are you going to make it happen. So it's important to dream together and share your goals, and I want to have this house someday, or I want to be able to go on vacation every year as a couple, as a family. What are those things and how are you going to get there? Charitable giving, that definitely something that comes into your budget, and how does that look? And Zach said, you know, we know how much goes for our bills and for everything that we need to live on, but we also have an amount that we say we're going to give this every month, whether it's giving to your church, whether it's giving to an organization that you believe in. What is that? Because when you do that, and I think it comes into play more so when it's a little bit uncomfortable to give that amount that you say, we're going to do this every month, even though that might mean that we don't go out to eat as many times, or we have to give up something. But when you stick with that and say, here's the amount, we're going to give that, you find out in the end that it brings in far greater rewards for yourself, and it comes back to you in other ways. It really does.